Hello traders, this is Peter and I'm excited to be with you once again for Wavematics weekly forecast, and I'm always happy when I'm with trading geniuses who are ready to tame the markets, and let's do it together. I promised earlier that before we go into this week's Wavematics forecast, I'm going to teach how I trade my triangle setups, and it's very important because triangles have nice setups which can give you very profitable trades when you understand the rules and guidelines governing it. And practically those who have been following me for some time knows that I use Elliott wave approach and Fibonacci in most of our analysis, and I can tell you that it's one of the finest in the industry. Today we'll be dealing with contracting triangles. The triangles are overlapping 5-wave affairs and subdivided into 3-wave patterns. They appear to reflect a balance of forces, causing a side wave movement that is usually associated with decreasing volume and volatility. Triangles are corrective patterns, and it usually appears in wave 4, wave B, or wave X. Those are the places triangles appear. It appears either in wave 4, wave B, or part of a combination. Let's look at some rules and guidelines of triangles so that you know when it is forming. Initially said triangles are 5-wave patterns, and they are also subdivided into 3 waves. So if you look at this image, you can see that we have A, B, C, D, E, and we also have a subdivision of A, B, C, A, B, C, A, B, C, A, B, C. That is the typical structure of a triangle. Let's look at some rules and guidelines of the triangle. You see, it is always a 5-way structure labeled A, B, C, D, E. Sometimes we do have 9-wave structures of a triangle, which are usually not common, but it do happen. Wave D and A do overlap. If you see, this is our wave A and this is our wave D. In triangles, they always do overlap. Wave D cannot move further the origin of wave C. This is wave D, and this is the origin of wave C. Wave D cannot move further the origin of wave C before coming down. As soon as it moves further from the origin of wave C, the setup is invalidated. So you have to relook at it. Maybe it is not a triangle forming. Wave C cannot be the shortest wave. This is wave C. It cannot be the shortest wave among them. And as a guideline, wave A is usually the longest wave, and E is the shortest. So this is a bullish contracting triangle. We also have bearish contracting triangle, which have the same rules and guidelines, same similarity, but this is in a bearish mode. Maybe we are coming from wave 3. This is the end of wave 3. Then there will be a sideway pattern, which might be a triangle for wave 4. Now let's go to a live example, and we will just use that into this week's analysis, and at the same time I will show you how I do my entries. So now we are starting with USD sways. On USD sways, March 17th, I posted in a Telegram channel this setup. I posted in a Telegram channel this setup. When I saw this thing, I thought, okay, this might be a triangle, and we are completing with C of E. So I posted this earlier that people should watch out for it, that they might get a nice entry here. And looking at the guidelines that we said that wave E, it cannot travel below the end of wave C. So if you get your entry here, you know that the best place to put your stop loss will be below wave C. So should in case the market comes below the end of wave C, it's no more the triangle you were looking at, and you need to get out from the market. So with your stop loss, you'll be taken out automatically. If you get it right, it can give you a very nice risk reward. If the market should come somewhere around here, you get about 4:1 risk to reward ratio. So let's see how we are going to trade this market this week. This week we are having 2 scenarios, and this is very important. Sometimes people just follow the Elliott rules and regulations thinking it's just objective, but Elliott wave is very dynamic. It is very subjective because the rules and guidelines are there. Then you need to understand the dynamics of it in order to always get the right entry. So this is our primary count. This is the triangle that we entered. This is how I entered this trade. You see, when I posted earlier, I was not interested in the short sell that I posted, so I placed a buy limit at the end of where the triangle support was, and made sure that my stop loss was below wave C. I went for 4:1 risk to reward ratio. Though the market can travel above that, but always when you are trading triangles like this, there can be alternative scenarios. So whenever I'm trading these triangles, you see, the best entry for triangles are when you enter at where wave D ended. That one, you have a lot of confluence, you have a lot of confirmation that the market is going up. So when you enter at this confirmation level, still to play safe, your stop loss should be below wave C. So mostly I use this strategy for swing trading when I'm going to be in the market for long, a week, 2 weeks, it can be days depending on how fast the market moves. So this is the ideal entry for the triangle. But if you're able to do your analysis very well, you can catch a very nice early entry, like I placed my buy limit and the market just failed and boom, we moved upwards. But there is a way. Those who are not already in the trade, you can enter the swing trade using the confirmation level at wave D. Those who followed the analysis I posted on May 17th, then now you have to manage the trade because you are in the trade, but we are not at the confirmation level, so the market can either come down or go. The market can either come down or progress upwards. So that is where our alternative wave count comes in. In our alternative wave count, you can see that the triangle can also be counted in a different way. Now we have wave A here, and now we are still having an A, A, B, C, D, E for wave B, which will give you a potential that we are coming down for green wave C of purple wave B before we go up. So when you are having two scenarios like this, you see the best way to trade it is, now earlier I posted that in our primary count, this was our wave D, and that is our confirmation level. So we have as a rule that wave E cannot pass the end of wave C. So if wave E should get to this level, if it should travel to this level, then that means it has invalidated this triangle setup, and at the same time it will be the trigger point for the primary count. So when you have two scenarios like this, if you are swing trading, the best way you put on the swing entry at the confirmation level, which is supposed to be a buy stop because the market is not there yet, which you should place it above the end of wave D. So when you come here too, you can do the same for wave C. Your entry is going to be at the end of wave D and your stop loss should be above wave C. So this one too will be a sell stop. Then you can also go for a risk reward, even if you get, because this one we are coming down for wave B. So you cannot get 4:1 we had on the primary count, but even if you get 1.5 on this trade, it's nice because you still get the upward trade. You still get the trade to the upside to complete purple wave C. So now that we've seen the two scenario setups and how to trade it, those of you who entered from the analysis I posted on March 7th, once you are not very certain whether the market is going to come down or go, the best thing is now you need to move your stop loss to entry, so that should, in case it is the alternative count that is in play, you will not be in a loss and you can get out of the market at a break-even point. Use the triangle that we studied to analyze USD sways for both our primary count and our alternative count. Now let's also look at Bitcoin. See, for Bitcoin has been in the sideways for quite a long time, since 2017, because this end of wave 3. And once price has not broken the top of wave 3, we are still in a sideways. We have two counts for Bitcoin, a bullish count and a bearish count. So now we are looking at, okay, if this is our bullish count, we've done with WXY for wave 4, and we went for a nice impulse wave of 1, 2, 3, 4, 5 for wave 1, and now we had a correction for wave 2, and we are anticipating the start of the next impulsive wave, which we've done wave 1 and 2, and we are looking forward to traveling to wave 3, then have a correction for wave 4, then wave 5 to complete purple wave 3. And alternatively, we also have our bearish count for Bitcoin, which has the potential of a triangle being formed. So now today we study triangles. We are having two live examples of triangles where we are seeing them in play. So with this, there is a potential of the whole correction be an A, B, C, D, and E. So we are looking for, if this is a triangle in play, we are looking for getting a wave down from level resistance trend line of the triangle to get purple wave V of yellow wave 4 before we go for an uptrend upwards. So now what you can do is, if you are trading Bitcoin now, you should trade it for the short-term basis on the lower time frames, because we don't really know which of the patterns that is in play. So as soon as price breaks the end of wave B, we are very certain that it's not a triangle in play, and we are going for our primary count, which is the bullish wave count. So as it stands now, if you go to this is on the daily time frame. On the lower time frame, if you get buy setup, it should be very short, because you know that the alternative counts for the bearish analysis have a triangle in play. So in case it's a triangle, so that you don't get out that, okay, now you are making some profits, then at the end of the market will hit the resistance of the trend line, of the triangle trend line, and comes down. So that is how you have to trade it. You always don't have to force trades. That is why we analyze a lot of pairs. The best way to make money in market is not entering too many trades, but getting the right setup. Sometimes I analyze about 40 pairs, sometimes 50 in a day, and I trade only one or two, which I always go for the textbook setups. That one, you have a lot of confluence, you have a lot of confidence. People, when you are new in this industry, when you are new in this market, the people think that the more you trade, that is when you get more money. It is not so. It is about getting accurate trades that brings more profits. When you get an accurate trade, which can give you a higher return, though scalping is good, but it takes a lot of psychological strength, psychological development before you can be a very good scalper, because people are not able to take drawdowns. And in scalping, always there are drawdowns, because you enter 3, 4, 5 trades in a day. There will be a day that's going to be a bad day, but once you have the psychology, you have trained yourself for it. Even if you have a bad day today, tomorrow you are going to get up. But if you are new in the industry, I always advise my students that you always have to start from swing trading. That one, you don't need to watch the market always. You do a 10-15 minutes analysis in a day. You can place a trade which is going to take you about a week or 2 weeks, so that you can get time to analyze your market, because you are studying, you are new into the thing. Once you're able to study the process very well, the money is going to follow. Let's move to Euro USD for next analysis. Euro USD is being one of a pair which have different scenarios. If you watch clearly on our Facebook page and on our channel, I keep on posting different scenarios of Euro USD, and that is how it should be. You see, the market is not static, so the market keeps on changing. That is why as a trader, if you want to be a profitable trader, you always have to analyze and update your charts. You don't just stick with one chart and say, okay, you see, the way we trade as a professional trader, you don't trade like, okay, I just set 2 moving average, it's crossed, so I'm buying. The market is changing every time. That is why when you are using Elliott wave, it gives you the wider perspective. It gives you a wider perspective, and always gives you 2 battle plan. That, okay, when it's not this scenario, it's not like, mostly I don't go back to analyze my chart. I know that if this scenario comes into play, we are moving into my alternative count. The market will definitely move into my alternate count, so that as soon as there's a trade setup, I don't spend much time on. I do the analysis always 2, 3. But when you are starting and you cannot do 2 or 3 analysis, stick with 1 and keep on updating it till you perfect your skill and craft. So with Euro USD, on this analysis, we are seeing ABC for yellow wave B, an impulse for purple wave A correction for B, and an expanding ending diagonal for purple wave C. So with that, we are anticipating that, okay, this is going to be a bullish ride to complete yellow wave C of purple wave C. So we are anticipating a wave 3, 4, and 5 to complete red wave X. Then we might come for another sharp correction for red wave Z before we go for the long-term ride, if this scenario is in play. So let's look at how we are going to trade this. And the Euro USD is in negative correlation with the dollar index. So it's like it's always in opposite direction. When this is moving upwards, Euro USD is moving upwards, the dollar index is moving downwards. It's Euro USD, and the dollar index is like a cumulative of all the major dollar pairs. And so if the dollar is strengthening, Euro USD will be coming down, because the dollar is strengthening, but when the dollar is weakening, it gives euro the upper hand against the dollar. So always I use the dollar index also to track what is happening on the euro USD. So looking at the dollar index now, we are in a very nice pattern. We had an impulse wave down for purple wave 1, and now we are having a correction for purple wave 2. We are now having a WXY. Wave Y can end here. If it ends here, that means that will be your wave 2, and it has a possibility of going price moving up to complete green wave Y of purple wave 2 before we come down for purple wave 3. So now with these two situations, you can use that. If there are some brokers who do not offer dollar index for their clients to trade. If you don't have dollar index on your broker side, you can still use this same scenario and analysis to trade euro USD. So what you do is, if price should move, the dollar should strengthen here before it moves down. When you go to your euro USD, let's go to euro USD on the 4-hour time frame. So if dollar should strengthen, then that means there is a possibility of price coming to this level before we go in for the upward trade. So that is why I've put in a question mark on wave C, that though this is a correction, but it might not be all of wave C. The price action has not given us much information to determine whether that is the end of it. So I'm tracking, and there is that potential. So there is a potential of we getting a straight trade of moving upwards, or price coming down before we move upwards. So trade with care. Euro USD is it keeps misbehaving, and it takes a lot of people out, because still price is in a form of side wave correction. That is why it is behaving that way. But once the impulse starts, it's going to be fast and sharp. So you keep your eyes open so that you can catch the impulse when it starts. Let's look at some stocks and indexes. Now looking at the S&P 500. The S&P today, I'm giving you, when I'm doing video analysis like that, I always like to give two scenarios of our primary wave count and our alternative wave count, so that when we are posting the charts within the week, you know how to manage your trades when you enter one. So this is our first wave count of S&P 500. So with this, there was a completion of yellow wave 4. And we are looking forward for an impulse wave 1. So we have 1, 2, 3. Then wave 4 was ABC correction. So with this was a flat for wave B. Then we have the correction for wave D. So how you can trade this week, that if this is the scenario, then that means we are still left with blue wave 5 of green wave 4 before we can move back to the correction. So there's still an upside. Price needs to move to the upside here before we go for a 3-wave correction for wave 2. Corrections can be in any form, but mostly wave 2 corrections are mostly zigzags, but flats can also be in play before we go for wave 3. When you go to the alternative count, the alternative can suggest that wave 4 has not completed, and all this huge price action might be a correction for wave 4. All this price action might be a correction of wave 4, and so now we are in we had an impulse. It can be an impulse. This can be counted as an impulse or a 3-wave pattern. Supposedly the correction is a flat or a zigzag. That is why I've not really counted that. I'm looking at how wave B is going to play, whether it's a flat or a zigzag that will be in play. So with that, we have a 1, 2, 3, 4, 5 for wave B, and there is a possible 3-wave structure for wave B. But there is also a scenario where price can move downwards before we go for wave B. So you have to keep in mind that, look at the two alternative scenarios. Then when you are trading one, you use the other to manage the other trades. So when let's finally look at Nasdaq. Nasdaq on the weekly time frame has been very bullish since 2010, 2011, and we are still in that bullish ride. So now price after completion wave 4, we are seeing okay, let's go for the last impulse of 1, 2, 3, 4, 5. So how we are going to trade this week is, let's go to the lower time frame. So on the lower time frame, we are seeing a 1, 2, 3, 4 and a possible ending diagonal of 1, 2, 3, 4 and 5 for wave to end green wave 5. So there is a possibility of price moving for either a zigzag for wave B before we move up. So now in ending diagonals like this, the safest form of entry if you are doing swing trade is to enter at the end of wave 4 of the ending diagonal. So let me give you a nice entry. That is swing trading. Sometimes, because in some pairs and some indices, so let me see the risks to reward. If we can get 1:5, 1.5. Yeah. So with correction, mostly if I get 1:1.5 or 1:2, I trade it. But if I don't get anything above 1.5, no matter how the setup is nice, it looks nice, I don't trade it, because I like more of the impulsive waves. That one I can get higher. But when I get a nice setup and I'm trading and I want to trade for corrections, I always try to get at least 1.5 before I enter the trade. So we will end here, and thank you for being in touch with us, and do subscribe to our channel, and we'll keep on updating the page with setups. We'll keep on updating the pages on our Telegram channel and on our Facebook page. We appreciate it with your likes, and do subscribe to our page. Thank you.